Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for next week, the week of May 9th through May 13th. And I know if you're a long-term investor or a buy and hold investor or a bull in this bear market, sometimes it feels like you're falling in a dark, endless pit. So we'll talk about can we see where the bottom of this pit is, and how can we strategize to avoid getting killed when we hit the bottom of the pit? And then we'll also talk about how this market behaves often like a pendulum, like an oscillator, and it swings back and forth. And again, how we don't have to fear this type of oscillation, how we can actually make money based on this pendulum oscillating behavior. So stick around. We'll talk about different strategies, how we can trade safely and make money in any kind of market. So we hope you'll stick around, and let's get started. Firstly, if you have not already seen the daily trading game plan that we put together on Thursday, May 5th, we would highly recommend that you take a look at that game plan. That was done in response to answer some questions from one of your fellow BeachBum traders posed in our Discord. And again, in response to those questions about the behavior of the market going forward during this past week, we put together this daily game plan video. So again, this begins to explain some of my theories on how the market can behave as a force-damped harmonic oscillator, which I'll give you some further references in a minute. And again, hopefully that will help start to explain that. Also, I wanted to ask all of you if you like that kind of quick daily trading game plan. Please let us know in the comments in our Discord and our Facebook group. Would you like to see more daily trading game plans like that? Do you find it helpful? Again, just a quick 5 to 10 minute recap of the market, outlook of the market on a more frequent basis. So please let us know if you'd like to see that, and then we can see what we can do. So we hope that helps. Again, as I started to explain in that daily trading game plan video, and also as noted in the title for this weekly trading game plan, one of my theories is that the market often behaves as a force-damped harmonic oscillator. And I won't bore you with the details of what all that means and the physics of it, etc. I'll probably do that further in a more detailed video, but I just wanted to give you some quick references as to what does that mean, why is a pendulum a force-damped harmonic oscillator, or it's an oscillator. So again, just from Wikipedia, I'll leave these references in the description box below. So again, you can dig into that in more detail, and again, we'll talk about when we look at some of the charts how we can see that kind of force-damped harmonic oscillator behavior. So we can see a pendulum as an oscillator, and I'll put that link in the description box below, and then also the link to a pendulum and how simple harmonic motion works, and the damping effect, the forcing and damping effects, and what that means. So again, a lot of details. Again, I won't bore you further at this point in time, but we'll go into more detail in a more detailed video in the future. So we hope that helps. Okay, let's take a quick look at how the markets ended up on Friday, May 6th. We can see all the indices ended up in the red. We can see they tried to make a late day rally to get to even, failed, and turned down at the last minute. We can see under the covers everything is still very bearish, very negative, more new lows than highs, more declining, and the majority below their 50-day and 200-day moving averages. So if we just take a quick look at some of the news, yields rise based on inflation, bear cases, sell-off, liquidation, volatility, etc. And then we could see, oil's been bouncing around and now up to 110. Natural gas finally broke down below 8 again, and gold had broken up over 1850 and then retraced a little bit. And then we can see the futures are indicating negative on all of the indices. And we can see all of the treasuries are up over 3%, with the 30-year 3.22. Right now they're not inverted, but they've been inverting back and forth over time. Okay, if we take a quick look at each of the indices, first the SPY, we can see over the past couple days, as we talked about in that daily game plan, it tested that resistance level, failed and broke down Thursday, Friday, and it tested that low. If we look at the weekly, we'll see again, we're looking for where's the bottom of the pit, and what we want to see is a real capitulation, right? Is we want to see a long tail bouncing off, and we can see here the SPY has made a lower low. It's tested the low back from looks like back from March of 2021, May of 2021. So the question is, are we at the bottom yet? So let's look at, we see, it fell off from its moving averages. It's well below. If we look at the Qs, the NASDAQ, very similar. It failed at its moving averages and then trailed off from there. Again, making new lower lows back to that May bottom. So we can see each of these is going to test that May bottom. The question is, does that bottom hold? Again, we haven't really seen that long tail capitulation. You can see back here we're looking for the bottom, and what we want to see is a true capitulation. And back May of 21, we see that long tail. That is a good indication that we hit the bottom of the pit, and then you can see from there we got to bounce up. So we're still waiting to see that true bottom. Where is that capitulation? We got a little bit on Friday, but we're still looking for this long tail capitulation to be able to say, yep, we've hit the bottom of the pit. So we look at the Dow, DIA, very similar. Again, we're seeing a little bit of capitulation there. That's, it's positive in terms of being able to find a bottom. The Dow has not tested this low. Here we saw a capitulation move, but it didn't hold, so that wasn't the bottom. And again, we'll see what the Dow does. The Russell's, IWM, again, very similar. Again, we're not seeing a true capitulation yet. Can't say we've hit the bottom of the pit on the IWM for the Russells. And if we look at the VIX, so again, we saw that spike in volatility on Friday. We'll talk about when we get to the futures how we're playing this volatility spike, but then it reverted very quickly back down to about the 30 level. So that tells us something as well, as volatility looks like it's retracing, reverting back down to its mean. So, and we'll talk about in our strategy, so stick around for our strategies. We'll talk about how we're playing volatility, etc. So we hope that helps. Okay, let's take a real quick look at the sectors, industries, in the groups tab in FinViz, and we have a video I'll put the link to in the reference box below, in the description box below, about how to use this groups tab in FinViz. But if we look at the sectors, we can see on Friday, really the only things in the green were energy and utilities for the week. Pretty much energy and utilities, a little communication services. We see the most negative here for the week was real estate and consumer cyclical. And on Friday was technology, communication, and consumer cyclical. Same thing for the month. So we can see for the current trend, longer term, is energy. That has the momentum, And as we'll talk about again in the strategy section, we can see based on this information that sector, the energy sector and utilities, are the ones with momentum, so you can expect momentum traders to continue to pour into those sectors even though they're very high. If we look at the industries, again, it's oil and gas, energy, etc. For Friday, and the same thing for the week. We see oil and gas, and for the month, and again for the week, we see the worst are probably going to be technology and real estate in this case. And then same way for the month, we see again energy, coal, oil and gas, etc. So again, those areas, those industries currently have the momentum. And on the negative side, again, we see, okay, there's entertainment. We saw some profit taking in some of the basic materials, but again, as we've talked about before, basic materials are a pretty good inflation hedge, as is real estate. So we should see there's probably some profit taking in those areas. So I hope that helps. Okay, let's talk about some of the economic data we got from last week very quickly. Again, you can see the highlights in investing.com. We're in the Surf the Markets Reports channel in our Discord. We'll show you that in a minute. Just some of the highlights is, Monday we got construction spending. Okay, so it is less than forecast, so that tells us, okay, construction, as we predicted, is the real estate market is probably rolling over. Also, ISM manufacturing was worse. So again, these are initial indications that the economy may be slowing in the future, and we'll talk about as how we're going to strategize to recession-proof your portfolio in a minute. Tuesday, again, factory orders were better, so that's a positive month on month. JOLTS jobs was still much higher than forecast, so there's still, and you'll hear the commentators talk about there's 2 to 1 open jobs versus people looking. So again, it tells us the job market's still very tight. The Great Resignation is still going on, and one of these days we'll talk about the impacts of that in more detail. And then on Wednesday we got our catastrophe, although the reaction to that we'll talk about in a second. But the results from that is they hiked interest rates at 0.5, 0.5%, as we expected. And they announced their quantitative tightening plan. How are they going to sell their bonds off their balance sheet or get their bonds off the balance sheet? So they said $47.5 billion runoff starting in June, and then ramping up after 3 months to $95 billion, and that $17.5 billion of that would be mortgage-backed securities for the first 3 months, and then 35. So that's what we've been waiting for, is what's the plan for quantitative tightening. So we know they're going to let bonds roll off for 3 months at a steady rate, and then step it up after that 3 months. So now we know what the plan for the bonds is, and we know that there's going to be a continuous selling for some period of time. So we'll talk about in more detail in the future how we want to plan that or play that and benefit from us. Again, they announced a 0.5 interest rate hike, and then some of the quotes from Powell's press conference that were notable is inflation is much too high. We've been saying that it's hot for quite some time now, and he just reaffirmed it's much too high, and that seems to be his focus right now, is inflation. And then they talked about additional 50 basis point increases should be on the table for the next several meetings. The next meetings are June and July, so we can expect further 0.5% hikes in June and July. So again, we can plan accordingly. And again, we've talked about, interest rates are going up. Now we know pretty much they're probably going to go up 0.5 for the next 2 meetings. And the big thing that prompted the market to go higher on Wednesday was the fact that he said 75 basis point increase was pretty much off the table, not currently under consideration. And the market really liked that, and so there was a big rally on Wednesday, and then we saw the snapback reaction, people realizing what all this really means going forward, and then the market declined Thursday and Friday. So Thursday we got jobless claims that were generally mixed. The continuing jobless claims was a little better than forecast, but the initial was a little worse than forecast, and the average is a little worse than forecast, and productivity was bad. So that bodes not well for the economy. And then we got unit labor costs were a little higher than the forecast, so that is again an input into higher inflation going forward. And then we got with oil, OPEC announced they were going to only do modest production increases. And then there's something going on with Congress is essentially irritating, going to tick off OPEC, which is a bad idea in my humble opinion. Again, I try to stay away from politics, but again, bad idea. And then the White House said they were buying back to resupply the strategic petroleum reserves, and again, that drove oil back up over 110 for now. So then on Friday, we got unemployment and payroll data, and again, it was mixed. Average hourly earnings were a little worse than expected, hours worse than expected, but payrolls were a little better than expected. And the unemployment rate was a little better than expected, pretty much flat. So another thing that came out late on Friday, which is notable, is that consumer credit was more than double what it's expected. And we mentioned this in the past, and we're going to talk about this in the future again, that this excess consumer credit is going to come back and bite the economy in the future. So we'll plan accordingly. So then we'll look at the economic calendar for next week. Okay, if we very quickly look at the economic calendar for next week to see what kind of catalyst we might have. We see some of the Fed officials are going to start talking again. If they say anything that's more hawkish than what Powell said in his press conference, that might cause some volatility. Then we got some employment, typical again. We've got a number of Fed officials talking. So if they hold the line with what Powell said last week, should dampen volatility. But if they come out and say they really want a 0.75 or bigger rate hike, that may cause volatility and cause the market to decline even faster. On Wednesday, we already kind of heard OPEC's decision, but there's a meeting there. We'll see what comes out of that. Typical CPI data. Again, this is inflation data. We know inflation's hot. If this indicates it's lesser or hotter than expected, that could cause market volatility. Again, PPI data on Thursday, so again, more inflation data that we get our typical jobless claims, again, state of the economy, and then we've got some sentiment data on Friday. So we've got a number of potential catalysts. Keep an eye out for the results. Again, we'll post the results real time in our Surf the Market Reports channel in our Discord, so please keep an eye on that. Hopefully that helps, and let's continue. Okay, let's talk about the major economic data that we received last week, and then we'll talk about what's in the upcoming week. And just as a quick reminder, please see the Surf the Market Reports channel in our Discord. You'll find a link to our Discord in the description box below, where we try to post near real-time economic data as it comes out. So you'll see as the economic data is released. Typically I go to investing.com and I will copy out the results from that economic data as quickly as I can and post it in this Surf the Markets channel in our Discord, so you can quickly be alerted that it's what the results are and take a look, and then we'll talk about the implications, and we can discuss that in that channel as well. So again, I'd highly recommend you check out the Surf the Markets Report channel, join our Discord, and you'll get near real-time economic data that way. Okay, we're still in the heart of earnings season, and you have seen and heard that earnings matter. Particularly, the market is currently looking for pretty any excuse to dump a stock. If they miss earnings, poor guidance, any supply chain issues, anything negative, that stock's going to get hit, and also stocks in that sector are likely to get hit. We saw that with Lyft and Uber. Lyft came out bad, clobbered Uber, so Uber rushed their earnings out. It didn't really save them, etc. So here's the Benzinga, the earnings report graphic from Benzinga. I'll also put that, I have put that in the Surf the Markets report channel in our Discord, so you can also see it there. I'll put the well, you can go there and see this graphic. You can also see the earnings calendar in detail, more detail in investing.com. And also, if you want to get a very near-term view of what times, what's coming up in earnings, you can get that information on the Markets tab in the calendar earnings in Webull. So again, you can get multiple views, a quick high-level view using the graphic to spot companies you're interested in. You can see in more detail on a daily basis. And then again, for the current day, what's coming up right away. So we hope that helps. Again, keep an eye on what's coming up for your current positions, anything you're looking to buy. If you're looking for an opportunity, an irrational reaction to earnings, the calendar should help you prepare for that. So again, we hope that all helps. We also wanted to let you know about an exclusive special that Benzinga Pro is running for Mother's Day. You can get 35% off Benzinga Pro. You can get a live news squawk, the Charlie live news squawk, scanners, exclusive market moving news, unusual options activity, and much more using Benzinga Pro. And again, right now, with our affiliate link in the description box below, you can get 35% off for this Mother's Day special. So we hope that helps. If we take a real quick look at some of the other data in the Markets tab in Webull, and then the online version of Webull, we can see advancers to decliners, almost double the number of decliners than advancers on Friday. And we can see, a bump towards the downside. Net inflows, again, NASDAQ, much larger outflows than the NYSE. And then if we go, we expect, mostly red, but if we look at the week for the best performing industries, again, it's going to be energy. So we see energy mostly, we see a little paper. Again, otherwise mostly red. Again, mostly energy. For the month, it's going to be very similar. Mostly energy, paper again. Again, mostly, almost exclusively energy is what's performing. That's why it has the momentum right now. If we very quickly look at the ETFs, we're going to expect, okay, so down, yeah, Dow down, S&P, short, down, NASDAQ down. And industries, we're other than energy, we expect to see all red. So yeah, utilities, energy, as we've seen. So those are the sectors with momentum. Again, consumer defensive, but not cyclical. Real estate was negative, financial negative, etc. Commodities, livestock, gas, carbon, sugar. Livestock, gas, okay. Total return, beta. Again, having a negative beta in this bear market means you're going to go up when the market goes down. And we've done previous videos on how to find stocks with a negative beta. And then bonds, inflation-oriented, tips, bear. And so now we can also look at the futures. Right now, as of the filming of this video, Webull is offering 5 free stocks when you open and fund an account. Typically they offer 2 or more free stocks, but sometimes they have special promotions, so please check our link to Webull in the description box below. You can also find on the About page or the header of our YouTube channel, BeachBum Trading YouTube channel, and or in the link section at the bottom of the About page, and or in the link section under Trading Platforms on our home page, beachbumtrading.com, bum without the U. And again, if you use our affiliate link to Webull, you can currently get 5 free stocks when you open and fund an account, and you can see those stocks can be up to $3,000 upon funding your account. So we hope that all helps. Okay, if we take a real quick look at the futures and the futures tab in FinViz, again we can see all the indices are pretty much declining. They're testing the previous lows back from May, and we don't see, there's some potential capitulation, but we don't see a real strong capitulation. And we can see the NASDAQ is definitely breaking down, the Russell's definitely breaking down. We see the VIX, spiked up to its previous high and then quickly retraced to that more recent high. We see oil 110, pretty much. Natural gas hopefully peaked. It bounced off of almost looks like 8 and is retracing. So hopefully that will continue to decline. Gold looks like hopefully it's turning back up. Gold and silver, again, their inflation hedges store value, so in rising interest rates and rising inflation, we'll probably see again a trend into precious metals. We saw cryptocurrency was declining, possibly inflows back into gold and silver. Platinum ran up. We talked about the ETF PPLT. Hopefully some of you got in on the bottom of that, and we're able to scalp or swing some profits there. We're watching copper. It's still actually relatively high, even though it looks low there. Same thing with palladium. If you zoom out on this chart, it's still a little relatively high, but we're keeping an eye on those for opportunities. The other commodities, again, they're running high. Sugar, we're keeping an eye on. And then we see the treasuries. Again, there was this irrational, exuberant move on Wednesday where both stocks and bonds went up. It was a risk-on move. It wasn't logical given the fact that we know the Fed's selling off bonds, and so that corrected very quickly on Thursday and Friday. We're waiting to see this bottom. We do know the Fed's selling off bonds, so there's still downward pressure for the foreseeable future. But when that does stabilize, then we'll look at how we can play and take advantage of that. We've also been looking at some opportunities, some ETFs that we'll share with you on how to potentially play some of these Forex opportunities, and then also we're looking into the Forex market directly, because we'll show you the risk reward on those ETFs is not all that great. So, but we hope that all helps, and let's talk about how we're going to strategize going forward. Okay, so how do we want to strategize to make money, at least survive in this current bear market, and hopefully make money? Firstly, in terms of the pit, we saw in the futures, etc., in the indices, we have not seen this strong capitulation yet. Therefore, we don't, we haven't seen the bottom of the pit yet. We don't know exactly where that bottom of the pit is until we see a strong capitulation. So, play and trade accordingly. We're in a bear market, as we've been predicting and saying since the beginning of the year. So again, play accordingly. We have a number of videos. They'll be in the description box below. Again, going back as early as January about how to make money in a bear market. How to make money amid rising interest rates. Again, hopefully you are well prepared for the Fedtastrophe this week. We didn't get it on Wednesday immediately. We got this irrational, exuberant risk on move, but then we got a quick correction on Thursday, Friday. So again, hopefully I would recommend reviewing those if you were not prepped for the catastrophe this week and their announcement and how we were playing that and how we want to play that going forward. We'd highly recommend you review these videos in the description box about, you know, how we prepped for that we saw the Fed hawks circling, and how you don't fight the Fed, don't fight the tape, and then how to make money amid rising interest rates. Again, we know interest rates are going up 0.5% per month for the next 2 months, and then we don't know going forward. And then also how to play a bear market. So again, a lot of strategies, and in these bear market videos we have lists of leveraged ETFs you can use to play long short, so you can play these momentum, these whipsaw moves to the upside and then back to the downside. Again, if you're a momentum trader, day trader, etc., play it as a bear market accordingly, and that's where the pendulum comes in. You know, when we get those force swings up, you can expect a equal and opposite reaction going the other way, and vice versa. Now, in a bear market, again, when you get an exuberant move up, we expect a move back down of equal or greater force going down. So again, we want to play those pendulum swings. When they kick it up, it's going to come back down. When they kick it down, it's going to come back up. And that's the concept of the harmonic oscillator, the pendulum. So we hope that helps with your mindset. When you see this types of move, you would expect, you know, a reaction going the other way. So finally, just start thinking about how to and plan on and work on recession proofing your portfolio. Again, in this video where we talked about how to make money amid rising interest rates, you know, for back since last fall we've been talking about how to deal with hot inflation. These are all ways you want to start positioning, because we know we have rising interest rates, hot inflation, and we're going to talk about in the future that I believe, and again, this is my opinion, not financial advice, but I believe we're headed for a recession, and we'll talk about some of the reasons why I believe that and how to position your portfolio accordingly. One of the things I'd want to note is you want to be in something that the consumer needs. They need food, they may need, you know, gas to get to work, etc. We don't want to be in areas where it's a discretionary spend and their customer base is such that they will choose not to spend that money. Those are the companies that are going to lose sales to the ones that are a necessity. So again, we'll talk about this more in the future, but just start thinking about and planning and recession proofing your portfolio for the longer term. So we hope this all helps. Please let us know what you think in the description box below. In our Discord, join us in the discussion. Let's talk about it. You know, if you see the bottom of the pit, let your fellow BeachBum traders know. And also, let's talk about these pendulum swings. So, and how do we make money on these pendulum swings? We'd love to hear your ideas and your feedback. So please let us know. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye.